So what's really driving these price swings? Well, some believe a good part of it is speculation, and they are calling for full disclosure of who is doing what. And this is the focus of today's Fast Feud. All right, on the side of those who believe full disclosure is absolutely necessary, we have Tyson Slocum. He's the director of the Public Citizen Energy Program. This is a national nonprofit consumer advocacy organization. And on the other side, we have Fred Hatfield, who was a CFTC commissioner from 2004 to 2008. And he says information should be and will be disclosed only to the regulator. So, Tyson, let me start with you. You recently wrote a letter to Congress and the CFTC. What was the purpose of the letter? What were you trying to accomplish with it?
Well, the data disclosure that Bernie Sanders released to me and to the Wall Street Journal showed individual traders and their positions in key energy futures markets. And we thought that the disclosure of this data was important for the transparency and accountability in these markets so the public and lawmakers and other decision makers can clearly see who is operating in these markets and who has large positions. This data was 3 years old, so it wasn't posing any risks to the markets, but it provided huge benefit to people trying to figure out who the speculators were and who was driving oil prices. And so that's what we were asking the CFTC to do, is to simply going forward to disclose trader-specific data so that the American public can know who is operating in crude oil and other energy markets.
So, Fred, let me turn to you and ask, what would the public do with this kind of data? And Tyson, you can answer this one as well, but I do want to give Fred a chance to start here.
Well, first off, Lisa, thank you for having me. It's great to be with you. And also, let me correct one thing you said in the introduction, and that was that I was only for this information being provided to the regulators and not to the public. The truth is that the United States collects more data on trading than any other country in the world and releases to the public more data on trading than any country in the world. And if you simply go to the CFTC website and click on the front page, there's a commitment of traders report. And in that box, you will see all sorts of different types of traders and the different products that the traders trade. That information is not provided every other week, as Tyson has suggested, but it's provided weekly, not only to the CFTC, but to the public.
So, Fred, if you're already releasing, if the CFTC is already releasing, or the U.S. as a whole is already releasing a lot of data to the public, why not release this data when it comes to the commodities markets?
Sure. Well, what's being suggested here, and let me start off by saying that the danger in Senator Sanders in releasing this information is in and of itself a great example of why it shouldn't be done. He came out and said that the banks were driving the price of oil up. And then he released data with the names of specific traders and purported to say in that same interview with Bloomberg that this showed that speculators, banks specifically, were driving the price of oil up. People now that have looked at the data that's been provided to the CFTC from 2008 have noted that the banks were 2 to 1 short during that time. In other words, they were betting that the price of oil would go down. So I would make the case that if people like Senator Sanders are concerned that the markets were being manipulated, perhaps they ought to look and see if they were trying to manipulate the price to be lower, not higher. So my concern, Lisa, is simply this, that the regulators need this information. The CFTC has done a great job in the past of using this information in the correct way. Releasing the names of the specific traders simply is being used to bandy about politically and turn this into a political football in a way that shouldn't be done.
So,
it's
Tyson,
harmful to the markets.
Fred, let me jump in here and get Tyson's opinion on this. What is the public going to do with this information? I mean, what have they done with the information released on Senator Sanders' website?
Well, first, it's clear that we need more data. We only have data from one single day.
But why?
And it is difficult to draw. Because that's all we got from Senator Sanders, which is what he got from federal regulators.
But
we need this data over a longer period.
What is that?
We're going to be able to know exactly what companies and entities are controlling or have a big chunk of energy trading markets. And that, like Goldman Sachs, for example, with 35% of positions on that given day, that shows that Goldman Sachs is an outsized player in these markets. And I think that the banks want to keep this information secret because it is damaging from a public relations standpoint that they are seen as having a huge involvement in markets at a time when prices are very high. And so they understandably don't want the public to know that. But the public has a right to know. This is not proprietary information. This isn't going to be something that's going to be revealing secrets. Lisa, we do it in equities markets, where if an entity has, say, over 5% control over the stock of a company, they have to be publicly identified because it's an important disclosure so that we know who the big movers and shakers are in a given stock. The same should apply to these commodity markets so that the public has full information about what is driving prices so that we can answer this question, is speculation driving it? Who are the speculators? All of this is going to be critical information.
All right. Well, we have to leave it there. Fred, Tyson, good to have you both on. Obviously, this debate clearly doesn't end here, and we'll continue to rage on. But we want to thank both of you for joining us today. We had Tyson Slocum, director of the Public Citizen Energy Program, as well as Fred Hatfield, former CFTC commissioner from 2004 to 2008. Okay.